Welcome to Professional Insights, brought to you by the National Referral Network and hosted by the two. Can I say handsome bald guys anymore? I think I need another descriptor, Mike. So
we can work on that. I mean, we can use it today.
Work on that. And handsome bald guys, smart bald guys, guys dress very well and know how to stay inside their color wheel. I don't know. Anyway, we're here again, and as you're all aware, we do these segments to dispense information to professionals and or individuals that they might make use of somehow, somewhere. Today, Mr. Scott Penn is with us. He is an accountant extraordinaire from Southern California, specifically out in San Bernardino. We're going to talk today about how to stay off the IRS's radar, and if you happen to get on their radar, what you can do about it. Scott, so thanks so much for giving us a couple of minutes. Let me begin at the beginning here. How do you stay off the IRS's radar? What do you do?
Well, you prepare your return very carefully.
Just very clean. Just prepare.
Yeah. Like I just asked a guy, how do you not get wet in the rain? Bring an umbrella. Okay.
Yeah. You don't put things in there that one you don't need. Like we have, we just picked up a client whose prior year preparer put in $12,000 of mileage, which means about 20,000 business miles, and she only had $475 of income.
Oh,
so that doesn't scream audit, you know.
Okay. All right. That would seem a little fishy, yes.
Yeah.
So Scott, look, a lot of people don't understand the tax code, right, to begin with. And I've heard clients of ours talk about their CPA recommend getting a 3,000 gross weight vehicle car. And they're just like, and the CPA says it, and they're like, okay, sure, why not? But how does a client know when their CPA does something like that and they're wrong? Like how do you even know how to ask that question?
Boy, in my office, I hope this answers the question, but in my office, I am not a big believer in going out and buying equipment to reduce your taxes. I'd rather see you go out and put money into a retirement plan, something that comes back to you. And of course, if you need equipment, that's another story.
Yeah.
But you know, my first choice is always open up a retirement plan.
Okay. So you know we were happy that you say that, but there are limits to opening up retirement plans, obviously. What are some of the other? We're talking about staying off the IRS's radar. So your answer there is prepare your return properly and don't put anything shady on there that might catch their attention. Are there perhaps other ways? Does filing at a particular time of the year, does that matter?
No, that does not matter. The way I prepare a return is I don't put big numbers on a return because they stand out. So I'll take my numbers and I break them down into smaller pieces and put them on the return, and then nothing really stands out to the IRS.
So what you're saying, Scott, is each line, we'll call it a line item, has a range, right? And because I've heard CPAs talk about this too. And when some people when they go over that range, given their income and some of the things that you just talked about, then it can throw up a red flag. As an example, like you just mentioned, you have $400 and some odd of income and you write off $20,000 of mileage, right? So,
right.
But once again, like how, in order to stay off that the IRS's radar, how would someone like me know? I mean, like I know I asked this question, but it's a serious question in the sense that I don't even know what I don't know.
Yeah, well, I would not do it yourself in the first place.
Okay.
You know, I go see preferably a CPA or an EA, not H&R Block, and you know, I would trust them to do the job correctly. Now, do they do it correctly all the time? No. And we fix a lot of those errors, like the one I just spoke about with the $475. You know, like I say, I like to spread out the expenses. Like if we have a big office expense number. I may spread that out between office expense, and there might be some licenses in there. There might be some general supplies in there. So I'd like to split that out a little bit.
Okay. So we have quite a number of business owners that watch what we do here, and when we speak to them quite a bit, for business owners, there is obviously a big difference between tax planning and tax preparation. How important is tax planning for business owners so that you can avoid a lot of this?
Tax planning is the ultimate. We do tax planning starting in July for our business clients, because I really hate surprises come April 15th.
Okay.
So for those of my clients that take me up on that, we are so close to exactly what we projected. It's ridiculous.
Okay.
So projections, I mean, I think, Mike, this is one of the things that we talk about with other professionals about, right? Not just tax planning, but just in general planning, right? A financial plan. But sometimes, Scott, things go sideways, right? I mean, we can plan as much as we want to, but things go sideways. So in those cases, right, you've been doing this on the tax resolution side for 30 plus years.
Mm-hmm.
And so at what time, right, because things go sideways, at what level does somebody need to look at that problem in terms with an IRS and say, I need help with that if things go sideways?
On the tax return?
No, like if an IRS calls and says, hey, they start garnishing wages, or they start, pulling money out, or they, if you got this big tax bill, right, because something just you forgot something.
Right.
At what level do they need to call a professional like you to help them with the IRS?
Well, we want to avoid the accuracy related penalty, which is a flat 20%. So, that guess you could use that as your measurement. With this one client that I'm talking about, we're going to amend the return before the IRS gets involved. That way we avoid the 20% penalty.
Okay.
Is that what we're looking for, Mike?
Well, yeah, I mean, at some level, Scott, but like there's the level that you and I talked about that is like, look, if somebody has a $2,000 tax bill or an IRS problem, now granted, can you help them? Yes. But is it viable? I mean, is it really something that they need to do? And what is that level that they actually, it's like, I cannot do this on my own. I need a professional.
Right. Well, even though I like to set a $15,000 problem area, I take all clients because I know I can help everyone.
So in other words, there's no fish too small that we would say, I just throw that back. You'll help anybody with any size problem, is what you're saying.
Yes.
Okay. So in going back to the business owner, first of all, what are the steps? Somebody gets that, that audit letter. I'm going to get audited. That scary, that notice from the IRS. What steps should they take to prepare themselves for being scrutinized by the IRS?
Once they receive the letter, or before they receive the letter?
Before, after, and during.
Okay. Well, before the letters, as we spoke before, we want to try to make the return look good. I have what they call the duck theory.
Okay.
If it looks like a duck and quacks like a duck, then it's a duck.
Mm.
So that's my theory there. As far as when you're in.
What if the duck doesn't identify as a duck, though? No, I'm just kidding. Keep going. Well, I have to say that. Anyway.
So if they receive a letter, then I would call somebody like me to respond to the letter. I would not call the IRS yourselves, because they're going to put you into a corner. Okay, you're going to say something to them that they're going to say, "Oh no, well you can afford $500 a month." Then, that may not be the case.
Okay.
And then also, if you're in a plan and you've been paying for a number of years, we can always renegotiate and get a lower payment plan.
Okay. Now, how should you, if you're going to get audited, how should you prepare to, because it's happened to me a couple of times. I had to go to the IRS office, and it turned out it wasn't as scary as I thought it was going to be, but I did have to do a lot of preparation. What kind of preparation should everyday people and business owners make if they're going to get audited?
Well, you want to make sure that you have support for every item you're putting on the tax return.
Okay.
Okay. The areas that they look at are mileage, non-cash donations, and office and home.
Okay.
So, if you have any of those things, your chances of being audited have increased.
Okay. And with people working at home more than ever, is that now an area of scrutiny more than ever, the home-based deduction?
Yeah, they're looking into that. Not as much yet, but they will, especially with the new hiring of those agents. With that $80 billion infusion.
So there's more IRS agents out there.
They're hiring. Yeah, they're going to start hiring a lot more agents.
Oh, good. Okay.
Yippee! It's gonna be fun.
Agents. Mike, close the show here as we wrap up here, Scott. So, Mike, do you want to put the crawl on here, and do we have the crawl?
Oh yeah. Dang it! I always forget the crawl.
So those of you that need help, here's Scott's information here. Scott, it sounds like you do all kinds of things tax-wise, from tax planning to tax preparation to tax resolution. You wear all those hats.
Yeah,
so
I do.
You can help anybody at any level with anything. You're based out in Riverside, but are you also licensed multi-state, or are you just California? Or tell us a bit about that.
Well, as a CPA, you're only licensed in the state that you passed the exam.
True.
Well, I'm licensed in California.
I knew that. Okay.
And I'm also licensed in Oregon because I used to live there. But I've gone out. I've taken it one step further, and I'm an enrolled agent. And when you're an enrolled agent, you can do a tax return in every state of the union.
Oh, wow. Okay. So you've got a pretty big footprint if necessary. And if somebody has a tax issue and they need a tax resolution specialist, and they happen to be from a state where you're not licensed as a CPA, can you still help them?
Oh, definitely.
Okay. Wow. That's great. That's great.
And Scott, you have the certification. What is that? CRTS?
Yeah, I'm also a certified tax resolution specialist, one of the few.
Wow. Okay.
Crazy tax guy.
You're practically if the Avengers had a tax guy, you'd be him.
He would be on the team.
He'd be on the team.
I'd be him. And currently, I'm working on a program where we're going to try to reduce somebody's taxes down to zero and limit their liability as well.
Okay. Wow, that's great. Mike, close the show here, would you?
Well, Scott, appreciate the time. If you found the video helpful, please like, subscribe, hit the notifications, share this with your friends and family, because I know a lot of people have a lot of questions regarding taxes.
Yeah.
For more information, we are here every Tuesday morning with professionals just like Scott. If you have any questions, leave them in the comments. If you'd like us to cover a topic, leave it in the comments. But other than that, thank you so much for your time.
And I want to also put in a plug. If you're looking at the National Referral Network for the first time, the little thingy is up there in the right-hand corner. You can check it out at www.nrnamerica.com. We are always looking to add professionals and add to our brain trust. It benefits everybody. so many benefits for so many benefits in the network. I don't even have time to speak about them. So check it out. Do it on your own. See you all next week.
Thank you, guys.